Welcome to the Professional Edge. My name's Todd, tax attorney and certified financial planner. We're talking about investment tax planning. So let's look at the Internal Revenue Code and look at some code sections which you may or may not know off the top of your head, like me as a practicing tax attorney. First one's 1035 of the Internal Revenue Code. What does that apply to? Well, 1035 says that we can do a tax-free exchange of insurance products. Well, that right there, that word insurance or life insurance or annuities scares everyone. They shut down as soon as they hear the word life insurance or annuities. They freeze, they stop. But listeners here on the Professional Edge, you may have had this annuity. Well, let's talk about what type of an annuity you have. A lot of you have these variable annuities. You're in the stock market. The value of that underlying value can fluctuate with the stock market because it is actually invested in the stock market. That is what is a variable annuity. It's a wrapper around an investment, and therefore it can fluctuate. There are some guarantees. One is a death benefit guarantee, which usually says if I put $100,000 in my variable annuity, and lo and behold, we have some market corrections and the cash value of that variable annuity is dropped to $70,000, and I'm so upset that I have a heart attack and die. Well, my beneficiary is going to receive $100,000. That's that quote death benefit to guarantee the principal. But if I surrender that variable annuity during my life, then I'm only going to be allowed to take $70,000, the underlying cash value of that variable annuity. So that's where we do a 1035 exchange. A lot of individuals have allowed their exposure to be too much to the market matriculations. And in 2022, we saw the S&P drop by 20%, the NASDAQ drop by 30%, and we had to look back 80 years for the bond sector to do what it did last year, and that is a negative 10%. So there was no place to really hide in 2022 with market performance. So the only place to be was cash, but a lot of our listeners here on the Professional Edge were not in cash because cash was not paying anything. So in a rising rate environment, the bond portfolio did a historical 80 years. We had to look back 80 years to get the level of negative return that we had in the bond market. So again, it's a wake-up call to see if your strategy is making sense for your safe and secure retirement. And being a listener here on the Professional Edge, you get to wear the lucky badge of you have to plan for 20 years in retirement. You are the first generation to have to plan for a 20-year-long retirement. Well, that previous generation only had to plan for less than 10 years. Because when we retired, we bought the Lazy Boy, got the remote, and you were expected to die before you were 70. Well, now you, being the generation, the long-term generation, the baby boom generation, are having to plan for 20 years in retirement. And that's where this volatility and having a real plan of your retirement, what bucket are you going to actually take money from? And that goes back to investment tax planning. It is a structured plan of distribution on how much you should take from your pre-tax dollars. That's your 401k that you should roll over to a rollover IRA. So it is a self-directed account, not leaving it in the 401k that has limited investment options. You roll that out so you have the universe of investments that you can allocate your portfolio to. It is beneficial. So we have that. Then we have your after-tax account. Then we have your Roth account. And that is all part of this investment tax planning, because if we take from one bucket and we overpay our taxes, then we're going to have less capital to continue to grow for us during this 20-year-long retirement projection. So when we sit down at estate management counselors, we gather the information, get a snapshot, and we say, okay, how much are you wanting to have net spendable per month? And we run that calculation. That's where the financial planning software comes in. We see if you're going to run out of money before you run out of time. That would not be the great scenario. So we then start analyzing what we need to do to make that objective work for you. Well, you may be 3 to 4 years from retirement, and that would be an opportune time to sit down with us at Estate Management Counselors to make sure that you're on track, to make sure that you're going to have that safe and secure retirement, and you're not going to run out of money before you run out of time. So we make that analysis, and it may come up that, hey, I understand you want to retire at 62, but if you work to 64, gather another couple shekels to put in your retirement portfolio, then the probability of success of not running out of money before you run out of time increases dramatically. That is the conversation that I, as a listener here on the Professional Edge, would want to have and to know. I'd rather work 2 more years to have peace of mind that I'm not going to run out of money during my retirement. And I'm going to have a safe and secure retirement. And that takes into account, you may have that variable annuity. You haven't looked at it. You haven't reallocated it. It's just there. You get these quarterly statements. It's sort of out of mind, out of sight. You haven't done anything with it. Well, that's invested in the stock market. Your 401k is in the stock market. You may have an after-tax investment account, and that's in the stock market, but you have nothing protecting the capital. So that's where we utilize the Internal Revenue Code, Section 1035, and we move that variable annuity, and now we lock in your principal. So therefore, it's not subject to market risk anymore. So you get to participate in the market when it goes up, never when it goes down. Okay, that's a pretty good concept, sort of like the high water. I can pour water in a glass, but the only time that water goes out of the glass is when I drink it. Well, if you're drinking the water, you're using and withdrawing the funds from this different vehicle. So pretty cool concept. Some years we might not be able to add any water to the glass, and it just sits there and secures the value and all the income that you have been credited. But then lo and behold, we get to add some more water. There we go. We go up to that high water mark. And if the market has volatility like we had in 2022, you do not participate. You just look at that glass of water and you say, hey, you know what? I still have all the water in my glass. That's an interesting concept, and that's available to you here as a listener on the Professional Edge. So again, if you want to secure your retirement, have that safe and secure retirement, you got to take some money off the table every once in a while and secure it. Make sure that your principal is protected. A lot of individuals have been looking at CDs. Yes, CD rates are north of 5%. So does it make financial sense to secure some of your investment portfolio in CDs? Depends on your circumstance. We got to run the numbers, run the analysis, and then that analysis will tell us what amount to put in CDs. It's okay. Makes pretty good sense if that is part of your investment plan. So again, to run that analysis, do give our office a call at 877-654-9798. That number again, 877-654-9798. So back to this vehicle that we move underneath Code Section 1035 exchange. No taxable consequence. You purchased that variable annuity 10 years ago. You put in $100,000 and it's now worth $180,000. But that $180,000 is not protected from downside risk. So let's move it, capture and lock in. That is a key provision. I want to lock in the value that I have accumulated within that investment. I want to take it away from the market risk. So I have those secure dollars. We can do that. We're not going to pay tax on that growth of that $80,000 to make this move underneath 1035 of the Internal Revenue Service. And now we lock in $180,000, and let's say it grows 5%. That's going to be $9,000. So with that 5%, that $9,000 goes into your account value, and that also gets locked in. So anything it gains, it gets locked in. And again, just like pouring water in a glass, it just sits there. So now, if the market has a turmoil like we did in 2022, market goes down, you look at it and say, you know what? There's my glass of water. It didn't go down. I didn't take it. I'm not subject to market risk. I still have my glass of water. So if that's an interesting concept and you want to have that confidential conversation, we can meet down here at the Cunningham Center in Columbus, or we can meet in Atlanta, or virtually. If you have received the information on listening to the podcast, The Professional Edge, you're in the great state of Indiana, where I was born and raised, on a farm milking cows, baling hay, then we can meet virtually via the Zoom. So again, my number, 877-654-9798. That number again, 877-654-9798. It's one of those interesting strategies. It's okay to take some chips off the table. It reminds me of Kenny Rogers when you're sitting at the table. Know when to fold them, know when to hold them, know when to walk away, and know when to run. Well, we're not running. We're just being a little bit more prudent as we protect our capital. And again, that goes back to structuring your rental real estate. Put some liability protection around each one of those properties, so you have that safe and secure retirement. So we need to be proactive. And again, think about professional athletes. They always have a coach, right? Tiger Woods doesn't operate by himself. These professional baseball players, they have pitching coaches, they have batting coaches. They're the top elite. Think about that. They all have coaches. That's what we do at Estate Management Counselor. We are your assistant. We are your professional counselor and advisor. And being a registered investment advisor, which I'm very proud of, we have a fiduciary duty to our clients to act in their best interest at all times. And again, that is different from a stockbroker. They only have to provide suitable recommendations. We are a registered investment advisor. We have to provide counsel and advice in the best interest of our client. So if you want to start receiving that information and that legal professional counsel to integrate your tax planning with your investment planning, with your estate planning, take advantage of emcthebundle.com. That is Echo Mary Charlie, thebundle.com. My name's Todd. Thanks for listening to The Professional Edge.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Todd by calling 1-877-654-9798. That's 1-877-654-9798.